It's a huge setback for the middle class. The government has recommended cutting interest rate of Employee Provident Fund to 8.1% from 8.5%. This will be the lowest PF rate in over 4 decades. We're talking about a retirement fund. There are more than 6 crore subscribers of Provident Fund who will be affected after this move. The interest rate of 8.1% has been declared basis EPFO's estimated income for the year at over 76,000 crores. This will leave the retirement fund body with a surplus of 450 crore rupees. All right, so this is the latest that we are getting for you as far as the EPFO is concerned. The government has recommended a rate cut, and this is going to happen from 8.5%. The existing rate is 8.5%, and the government has recommended a cut to 8.1%. The Finance Ministry, this is a recommendation made by the board, and the Finance Ministry is yet to ratify it.
हमारे बोर्ड ने जिस प्रकार की अंतर्राष्ट्रीय परिस्थिति और इक्विटी बाजार की स्थिति बनी है, उसमें इन्वेस्टमेंट के साथ जो सोशल सिक्योरिटी को भी रखना है, हम बहुत हाई रिस्क वाले इंस्ट्रूमेंट को नहीं ले सकते हैं। वो मार्केट करने के लिए हम लोग नहीं, हम मार्केट में एक स्थायित्व के लिए, एक सामाजिक सुरक्षा के लिए हैं। और इसलिए इस बार हमने जो रिकमेंडेशन हमारी कमेटी की तरफ से, बोर्ड की तरफ से करी है कि हमारे ईपीएफ पे 8.10% ब्याज दर अनुमानित आय और अनुमानित आय के मुकाबले के लिए हमने रिकमेंडेशन करी।
Important point that has been discussed and considered was the ongoing Russia-Ukraine tension and its impact on the market and the the possibility going forward. The third important point that has been discussed in this meeting was the surplus amount that EPFO should have to provide the welfare schemes to its subscriber. So these three important aspects that has been considered before reaching on this decision, and finally Central Board of Trustees has decided to bring this rate of interest to 8.1%. After that, it will go to the Finance Ministry for the final approval. Then it will be passed on to the consumer.
All right, to understand how this move affects you directly, I'm joined by two guests on the broadcast, Harsh Rungta, who's founder of Fee Only Investment Advisors, and Abhishek Rastogi, who's a CN advocate. Thank you so much for joining us. First, I would like to speak to Mr. Harsh Rungta. We've seen that the board has made this recommendation that cuts the PF rate from 8.5 to 8.1%. This is being seen as a massive setback for the middle class. What is your reaction to this development? And for the benefit of our viewers, if you could help us understand why the board has recommended such an interest rate.
Yeah, I think just looking at the interest rate itself would not be correct. I mean, just imagine, this is an investment fund. End of the day, it's managing one of the largest investment funds in the country. It is declaring rates for... Hello?
Yes, please go ahead. I can hear you.
It is declaring rates for the year that's already gone by. We're sitting today on the 12th of March. This rate is now going to be approved by the Finance Ministry. So by the time you're going to get the actual interest rate, the year would have been over. I think this performance, and this is a completely smoke and mirrors effect. We have no clue how they have arrived at this 8.1. How had they arrived at 8.5%? I think the transparency in an investment fund is completely missing. And I think it is a commentary on one of the largest funds in India that, the interest rates are decided in such a manner. It's because I think the bureaucrats and the politicians don't want to let go of the control. You look at an alternative, you look at NPS, which also does a similar job, right? There is no suspense. There is absolutely no suspense. What you get from the market is what the subscribers will get. And they have done an excellent job because it is a proper fund with proper guidelines and proper investment guidelines. Here, it is in the control of bureaucrats who decide what will happen. I think it's a very, very sorry state of affairs for the amount of funds that the EPFO manages. And I think we will see some big, it's not at all transparent how this
Okay.
interest
That's an
determined in
that's
the
a very
first.
important point that you made. I'm also joined by Mr. Abhishek Rastogi, who's a CN advocate, and PN Vijay, who's a senior banker and economist, is also joining us on the broadcast. Mr. Rastogi, if you could weigh in on this development once these interest rates are slashed, it's going to be a big setback because a lot of people, and of course this is known as the retirement fund, a lot of people bank on it, a lot of people depend on it for their latter part of their lives. What is your view on this, and do you agree with Mr. Rungta that the process is not transparent enough?
See, I think there are a couple of thoughts here. One, that certainly if we see the subscriber base, it will impact to about 6 crore subscriber base. But out of those 6 crores, my estimation is that about half of them would be hard hit because they would certainly be dependent on some returns from these EPFOs. So from that perspective, yes, about 30 million subscribers would be hit possibly below the belt with respect to this slash. The second important aspect is the timing. So if we want to prescribe this rate for the entire financial year 21-22, and at this stage we are in March, so hardly any time left in this financial year. So I think that timing will remain a concern because this was not expected. Now, we must understand that this is the lowest rate which has come in last 4 decades. So last time it was in 77, 78 that it was 8%, and it has always been more than 8.25% in all these 4 decades. So I think from that perspective, it is important that, should we go down to that level? Of course, we understand that there is a need for a certain stability. We also know for a fact that based on the estimated income, which is coming to about 768 crores, this has all been determined. But yes, the timing could have been improved. The transparency could be better. Can there be a mechanism to ensure that those people who are falling in not a very high income group and have still invested in these funds could get some sort of relief so that the brunt is not equal for everyone in that category from these refunds, from these benefits. So I think while we understand that economic reflection is the direct corollary to this rate reduction, the global crisis, oil prices, gold prices, if we see all of those cumulatively are leading to the conclusion that there must be rethinking of reducing this rate. But I think as far as India is concerned, we must be mindful that this income remains the income on which a lot of people are dependent, on what a lot of these subscribers are
Right.
dependent. And sometimes in few cases, this is the only investment which they make in a year. So from that perspective, is there a need to go down to that rate, which is as low as in last 4 decades?
Absolutely. PN Vijay, do you want to weigh in on this? The interest rate that the board has recommended, they'll be lowest in 4 decades. And as Mr. Rungta and Mr. Rastogi have been saying that a lot of people depend on it. This is also the retirement fund. Several million of people will be affected by this. What are your views?
I feel this is one more nail on the coffin of the middle class. This government and the RBI have been waging a war on the middle class. If you looked at the consumer inflation, it is the highest for a long time. And good economics tells you that you relate interest rates to inflation. Also, the banks slashed interest rates, and you get in 1 year 5.5%. The senior citizens rate was also slashed. So consistently, the government has been unfair to savers. Avowedly, the RBI and government are saying we need to keep interest rates low in the economy so that there could be growth. I do not agree with that argument because on a more macroeconomic level, when you reduce the income of the middle class, that affects consumption. The biggest problem in the Indian economy today is consumption. And it's the middle class is already hit by high food prices, high edible oil prices, which have gone up 20%, high oil prices, which are already high and bound to go up. And how can the middle class manage its budget? What about senior citizens? How do they manage their incomes? So I think this whole idea of keeping on reducing interest rates so that industry can get low-cost funds is, in my view, very short-sighted. And I was expecting this because last 1 year, I've been saying repeatedly, the RBI and the government have been slashing interest rates, which is unkind to the middle class. And this 8.1, as you rightly pointed out, is the lowest in 40 years. This doesn't make sense with petrol prices above 100 rupees. I'm sorry, it doesn't make sense at all.
Okay. All right, I'll make a point and I would request all of you to weigh in. I was going through certain reports and it's believed that the government has, consistently opposed and they've questioned a relatively high interest rate on EPFs. And another aspect of this is that during COVID, a lot of people withdrew their provident fund interest rates, they withdrew their amounts. So do you think this could possibly be a reason for the government to slash these interest rates? We can start with Mr. Rungta first.
I think two things. I think there is some confusion about social security and provident fund. I think this is an investment, just like any other investment. And one must not forget that on top of this 8% or 8.1%, there is a tax break that you get for contributing, and the interest itself is tax-free. Now, obviously, for the bottom 0.5%, that neither is the tax break relevant, nor is the fact that it is tax exempt relevant. But for the middle classes, that's very, very relevant. And even at 8.1% tax-free, it is still a positive real interest rate, even at the current elevated inflation levels. And I think ultimately, if somebody has got to pay the price, it should either come from the government's coffers directly. So obviously, it is all that if they want to give benefits to the people who contribute to the PF, it should come from the government's budget. How can the EPFO give, which does not take away from the fact that there is complete lack of transparency about how EPFO works.
Okay.
And I think it is a scandal. It is a scandal waiting to be discovered. And we clearly know that on the other side, there is, I won't say competing, but something that is a great example, which is the national pension system, which serves a very similar purpose, and which, because it gives the choice, because it is unitized, it gives a modicum of choice to the subscribers. It has been able to generate much better returns in the long term because it gives that choice to the subscribers.
Okay.
And here, because the choice is in the hands of the bureaucrats in EPFO and the politicians, we see all this happening. I think any social security that the government wants to give, it should give from the budget, not from the EPFO.
Right. Mr. Rastogi, you are a CA yourself. A lot of people turn to you and ask questions what they can do with their money and in order to save their tax. For our viewers who are watching this broadcast, what would your advice be? Because a lot of people may not understand the nuances of why the government is doing so. They might understand that the interest rate has been cut, but the technicalities of it might overshadow or might cloud their judgment. But for the benefit of our viewers, if you could give them one piece of advice, what would that be?
See, I think that's an important question which you have raised. We must understand that if this interest rate would have continued at 8.5%, there would have been a deficit of about 3,500 crores. Having said that, we must also understand that the tax buoyancy in the country has improved significantly in this financial year. If we see the GST collections, they have exceeded far beyond expectation, 130,000 crores per month. And if we see even the advanced tax collections, that has increased tremendously, which means that the tax buoyancy has increased beyond expectation, even if there would have been, even if we say that there is global recession and so on and so forth. So the point which I want to make is that while, of course, we understand that at 8.5%, there would have been a deficit. But I think the government must come at the forefront now to make good the losses which would be there to the fund by making appropriate interest being given to these investors, subscribers, for a reason that as we speak, the tax buoyancy is not bad. The tax collections are not bad. And so in the larger interest of things, some 3,000 to 5,000 or 6,000 crore rupees being used for this purpose would help significantly the subscribers, and it would not have the downside. It will boost the confidence because a lot of these subscribers, even from the legitimate expectancy perspective, if we see these investors have invested this, assuming that they would get about 8.5%, and suddenly if that gets reduced to 8.1%, that is basically reducing their output to the extent their investment to the extent of 5% returns. So from that perspective, I think the government has a role to play, keeping tax buoyancy in mind, and also keep in mind that both the corpus of the fund and the return of the fund has reduced because a lot of people have gone in the COVID situation. A lot of deaths have happened because of this maturity has happened. So the corpus size has reduced. The return has reduced because of the global recession and so many other factors, which, investors must understand. But I think the pragmatic approach will be that the government steps up and says that we had announced for 8.5%. We've been giving this rate for last 2 years. It would not come down to 8.1% and possibly have a pragmatic approach of keeping it to 8.3% and possibly using the tax buoyancy to pay this amount.
All right, Mr. P. N. Vijay, your final thoughts for the benefit of our viewers. If there's one piece of advice that you would like to give them, how they should view this development.
Well, my advice is they should sulk but continue to invest in PF because still the return is better than other sources. But they should feel bad about it. Second is it's very ironic, in the last 1.5 years, the government has spent about 12 lakh crores on the poor. 12 lakh crores. It spent about 3.5 lakh crores on the business community. Okay. And when it comes to the middle class, it wants to cut 2,500 crores. The middle class in India is about 42, 43 crores. And the middle class is the person who is paying GST, whose tax is deducted at source, who is the biggest saver in the economy. I would say the poor and the business people take money out of the system. The middle class is the only people who put money into the system. And that is the whipping boy of this government. The reason is simple. In the beginning, BJP used to be an urban party. Its vote bank was the cities. Now in the cities, BJP doesn't get votes. It gets votes from rural areas with its social combinations and so forth. So the middle class has ceased to matter to the BJP. It's very unfortunate, but it is, as I said in the beginning, it is hitting the 43 crore Indian middle class below the belt.
Absolutely, and a very important piece of advice for all our viewers: sulk but stay invested. Do not withdraw your deposits. Thank you so much, Mr. Harsh Rungta, Mr. Abhishek Rastogi and P. N. Vijay, for your valuable time and your valuable piece of advice to our viewers. We'll wait and watch when the reactions come in, because this is a massive setback for the middle class.